Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. Today we're going to talk about Tesla. Today they reported their Q1 2020 numbers. We're going to go over their numbers, we're going to go over their highlights, summarize what they talked about in their conference call, and just summarize their presentation overall. If you like what I'm doing, consider subscribing, give a thumbs up. It really helps out the channel, spreads my video, spreads my channel to other viewers, helps me grow the channel. Also, check out my other videos. I do a lot of videos about money, finance, how to invest your money, how to grow your money, how to make money work hard for you. Also, one more bit of business. If you want to get 2 free stocks, consider using my link down below in the description and you could get 2 free stocks. Also, you could sign up for a Robinhood account and you could also get 1 free stock using my link in the description below. Now, let's get down to business. All right, here are the highlights and summary of Tesla's report. So first of all, their cash. They increased by 1.8 billion to have a total of 8.1 billion in Q1. And that's not new news. We knew about this back in February, I believe. They did an extra capital raise. And at the time, a lot of people were saying, why are they doing this? You know, they don't need the cash. They kind of diluted their shares. So they sold more shares at, I think it was the 700, don't quote me on this, in the upper 7 or lower $800. That's what they were trading for at that time. And people were kind of confused about why they were doing it. But it turned out to be a fantastic move because they raised roughly $2 billion. They raised money when they didn't technically need it, and they raised money when their stock price was at all-time highs. And you'll know a few weeks after that, the whole illness 19 situation happened and the whole stock market crashed. So hindsight is 2020. Fantastic move by Tesla and their management team, raising capital when they had an awesome high stock price. And so that's why they have over $8 billion in the bank. That's why they did not need to borrow money at extremely high interest rates after this whole illness 19 crash happened, comparing that with other auto manufacturers likes of Ford, likes of Ford and GM. So, you know, both of those companies are in real pain. They had to borrow money against their credit at extremely high interest rates. So Tesla, on the other hand, has enough money to just survive for at least 2 years if things don't get back to normal, which, you know, the numbers already show that Tesla is doing perfectly well, at least Q1 of 2020. Q2 of 2020, we'll see how long the factory stays closed, because currently their factory is closed. But nonetheless, they have plenty of cash in the bank, and they are not needing to get extra cash outside in the market. So their profitability is increasing. So they had 283 million in GAAP operating income. That's 4.7% operating margin in Q1. 16 million GAAP income. 227 million non-GAAP income in Q1. And that is due to their Shanghai factory producing the Model 3, approaching levels, gross margin levels of the Fremont factory. And also Model Y gross margins are positive in Q1. In their operations, they're delivering the Model Y significantly ahead of schedule. As a matter of fact, it's roughly 6 months ahead of schedule. They were supposed to deliver Model Y, I believe, in the late fall. So they have been delivering in the spring. They started delivering in, I believe, late February or early March. So they are roughly 6 months ahead of schedule. So that is a big deal, because traditionally everyone says Tesla's timeline is never correct, or always late. They never get things up to production. But this just shows how much Tesla has learned in the past few years, producing the Model 3 and now producing the Model Y actually 6 months ahead of schedule. Here's a quick summary. Q1 2020 was the first time in history that they achieved a positive GAAP net income in a seasonably weak first quarter. So Q1 for any auto manufacturer is the weakest quarter. I mean, that's just the way the auto market is. You know, Q3 and Q4 are traditionally the highest revenue quarters. You know, people buy cars at the end of the year sale. People get, you know, their bonuses, whatever it is, the Christmas bonuses. So Q4 is traditionally the highest. Q1 is traditionally the lowest. That's not just for Tesla, that's for pretty much every auto manufacturer. Q1 of this year, 2020, Tesla actually posted positive margins. And Gigafactory Shanghai, further volume growth resulted in material improvements in margins of locally made Model 3 vehicles. In addition, Model Y contributed profits, which in the first time in our history that a new product has been profitable in the first quarter. So like I said in the past, they are producing these vehicles in China. So just the labor and the supply chain in general in China is obviously going to be less expensive than it is in the US. So the profits on the vehicles produced in China, because it's not like the vehicle itself, Tesla's vehicle, is selling for any cheaper. No, no, no. Tesla's vehicles in China sells for more than what they sell in the US. So they sell for more, but their labor is cheaper, their supply chains, their materials are cheaper. So obviously the profits are going to be much better in China, and that's what they're seeing now with the Model 3s they're producing, and even with the Model Ys. And so here's a report, Tesla's gross margins of made in China, Model 3 could increase to 40% or even higher. So that is traditionally a lot higher gross margins for a vehicle. Also, somebody tweeted Model 3, made in China Model 3, have gross margins as high as 35% versus the 20% gross margins of made in US Model 3. So this profit, this Q1 report, should be no surprise. I was expecting them to have a positive report, better than Q1 of 2019. And that's only because they already released their vehicle delivery numbers in early April. So they released this April 2nd. They had 102,672 vehicles produced and 88,400 vehicles delivered. And that is up from Q1 of 2019. Total production of Q1 2019 was only 77,138, and total deliveries was only 63,019. So that is a 40% increase for total vehicle deliveries year over year, and a 33% increase in total production year over year. So obviously they're producing more and they're delivering more, and so their numbers are positive. I mean, that's just mathematics. So that's no surprise to me. So let's look at Model S and Model X production. It's up 9% year over year, which is not that much. But their Model 3 and Model Y production is up 39%. Total production up 33%. And so, yes, Model S and Model X are going to see a decrease in production because Model S and Model X are the high end, the luxury end. Model S starting at roughly, I think, $75,000 to $80,000. Model X up to $90,000 to $100,000. So, those are not like mass production vehicles. Their mass production vehicle currently is the Model 3 at a lower price point. Obviously, at a lower price point, they're going to sell more. So obviously, their production of Model 3 and Model Y at the lower price point is going to see an increase, and their Model S and Model X production is going to see a decrease. It's just the nature of the beast. It's just the company evolving to produce more vehicles at a lower price point. So Model S and Model X deliveries just up 1% year over year. Model 3 and Model Y deliveries up 50% year over year. Total deliveries up 40%. Here's their financial summary. Automotive revenue up 38% year over year. Automotive gross profit up 75% year over year. Next box down, their total revenue up 32%, and their total gross profit up 118%. So like I said, no surprise, Tesla produced more vehicles, they sold more vehicles, they're going to make more money. And also they're starting to ramp their Model 3 production in Shanghai with higher profit margins. Obviously, I already talked about that. Higher profit margins coming out of China because it's cheaper to produce and manufacture in China. And they're selling their vehicles at roughly the same cost to the China market. And of course, that means their profits will go up. Better profit margins, better revenue. Here is a picture of their Shanghai factory. You see that this thing is absolutely massive, and they are already starting construction on the next factory, the Model Y factory. So they're going to be producing Model Ys and Model 3s out of the Shanghai Gigafactory. So how did this news reflect in their stock price? Obviously, their stock price is doing well. They closed at 851, and after hours, when their numbers came out, they had a 9.21% jump in their stock price to close after hours at 874. So I posted a video about a week ago. There it is. I only got 322 views, which is actually pretty good for my channel. I'm just a small, tiny little channel talking about money and finance. So that's why I appreciate every one of you helping my channel grow. But I predicted 1 week ago, Tesla is going to hit $1,000 as far as their stock price, $1,000 in May. As long as there's no major crash like we saw in March, I believe that Tesla will be hitting $1,000 in the month of May. I am keeping that prediction again, as long as the stock market doesn't crash, as long as the Dow stays in the lower 20,000 range. Tesla will be hitting $1,000 when their battery day comes. They're going to talk about the battery. They're going to talk about clear and concise ways that they're going to ramp up production, because the limiting factor right now is their batteries. They cannot produce enough batteries to produce their vehicles. So that's their bottleneck. If they come out and they explain a clear way that they're going to ramp up batteries, that's going to send their stock price busting through $1,000. I am sure of it. One more thing that I'm going to touch upon before I end this video. So a lot of people out there, Tesla bears, Tesla haters out there, they always say, oh, nobody's going to want a Tesla. No one's going to want an electrical vehicle when the gas prices are this low. People are just going to buy a gas car. They're not going to save that money that they would because gas is so cheap. And so I say to them, what now? I mean, gas price is historically low, probably rock bottom low, and still Tesla is selling like they never sold before, meeting production numbers, exceeding production numbers. A lot of people say, oh, all these subsidies, all the government subsidies that they're getting, that's the only reason why Tesla is selling. But you know what? Now these subsidies are going away, and yet Tesla is still selling. Tesla is still outproducing what analysts are saying. So Tesla has kind of come to this point where they don't need any subsidies. They don't need gas prices to be cheap, because really people aren't forking over $40,000, $60,000, $70,000 for a car just because they're saving $2, $3, $4 a day on gas. The math doesn't work out, right? You're not going to fork out $60,000 and say, oh yeah, I'm going to save $2 a day on gas. Who does that? No. Yeah, it's good that you save on fuel, throughout the year, throughout the lifetime of the car, but you're not going to plop down $60,000 just to save a few $100s on gas, right? Not going to happen. People buy Teslas because they love Teslas, because of the technology, because you're driving the future. So that's my last point. Thank you guys for watching. Give a thumbs up. It really helps out the channel. Spreads my video to other people. I really appreciate it. Trying to help this channel grow. Big thank you to all my subscribers. Exceeded 100 subscribers already. So thank you very much. I really appreciate each and every one of you. Consider subscribing if you haven't yet already. Check out my other videos, and I'll catch you in the next one. Peace.